Morning, everyone, here at Elevate Eagles Landing. As you can see, again, this, as the other properties I toured earlier today, the landscaping looks phenomenal. Our team does such a great job with that, and it really has this nice feel when you drive into the property. You can see the sports court here. Behind it, it's a little hard to see, but there's another court that's for the kids. Also, this whole base right here is actually part of the property. There's like a huge field, green field there. We're thinking about doing some fun events for tenants. So this property overall is doing very well. We're getting a good amount of leasing activity. We've got people interested in moving in, so there's a constant amount of traffic flow. The one issue we're having with this one is we're seeing negative lease trade-outs, meaning that the market here has taken more of a hit than in other places. So, units that were potentially going for $1,800 are now going for $1,700, or, in some cases, maybe it's even a little bit more of a drop. Now, the question is this a blip? Is this seasonal? Is this now a new market trend? So, the question is, what are we going to do about it? How are we going to proceed? Because the bones and the look and the feel of this property is phenomenal, and we're doing interior renovations as well. But the question is, how do we not get these negative trade-outs? We're planning to give some concessions to renewals. So people that want to renew, we'll give them a free month. That way they can maintain their current price point, and so they're not moving out and going somewhere else. And then we have to give concessions and lower rent to someone else coming in. So basically we're buying occupancy, is how you can think about it, because we really want to bump up. We don't have to go so aggressively as some of the other properties because we're already at like 90%. We're going to hit 95% pretty soon, but we want to make sure that we're maintaining our pricing. We are not dropping pricing too much. We don't have as many people turning, so that come next year when leasing season starts up, we're going to have a renovated clubhouse. We're going to have new furniture in the model unit, where the model unit right now doesn't look all that great. It looks okay, but we're going to put new furniture in there and move it. It'll look phenomenal. So that's really going to build this place up and make it look that much better, and we'll be able to sustain those higher rents, and we'll just push it forward. So these are the kinds of things we discuss every time we visit a property. We talk about the issues, how we're going to solve for them, what we're doing. We've got a huge marketing plan in place where we've got geo-tracking and geofencing and like more of a kind of AI-driven marketing push. I mean, a lot of cool things coming up that way in our marketing pipeline. So overall, this property is doing quite well. I have no concerns about it proceeding to do well. It's just getting over this blip and moving forward. But that's why we do these property visits, right? Every so often I'll come out here. We've got our asset manager living in Atlanta, so he's always here. But I'll come out here, make sure everything is as it should be, offer any suggestions, just do what I can to make sure that we're hitting our projections, and go from there. So thanks for listening, and hit us up with any questions you have.